Good morning. Let's get after it. We're on quite the highs of the rally right now. Last week we saw the market react bullishly to stronger anticipated job numbers from the December report. In particular, we had two key figures: the ISM manufacturing purchases and our average hourly earnings. Both these figures kind of showed signs of slowing and were below analyst estimates, which kind of shows that the Fed's rate hikes are starting to cause some waves in the economy. Going forward this week, it's no different. The December inflation report is supposed to be released on Thursday. The market is expecting month over month inflation to be at 0.1% and year over year to move down to 6.5% from 7.1. So as long as inflation continues to come down, the market will continue to rally higher in the future. We have a solid lineup of Fed speakers this week to keep an eye on. So let's make sure and be aware of all that. And, I really think volatility is going to continue to dominate the markets with, factors as Ukraine, Russia war. All right, down the rabbit hole we go. And some just basic looking at the broad market. The S&P 500 made some great moves last week, breaking out of the weekly range above 3,900. Right now, it's sitting at 3,900, basically to the tick. The nice engulfing candle on Friday should kind of confirm possibly a short-term uptrend for the time being. Going forward, if you look, the S&P 500 has a bunch of kind of resistance above it, right about the 3,900 region, 3,950, 4,000, 450, 4,100, and so on. So if the S&P can continue to trend higher and make higher highs and higher lows and break these resistances, then the market is in green light. As of right now, the new daily low is at 3,800 and long at 3,800. So it's kind of, the bulls have got to defend this and have some room to run to the upside. Anything under 3,800 and higher low is loss, so which would lead to further downside and support kind of being retested at 3,750, 3,700, 3,650. US 30, Dow Jones. The Dow also made a new daily high, a new daily higher low last week off of kind of like very strong support, about 32,800. I'd say as long as the bulls kind of continue to hold 32,800 level, there should be room to retest the high of the trend and resistance at about, I'm looking 33,500. If the Dow can't hold it, I think we're back down to 32,800 region in the future. This will probably lead to like lower prices, targets of looking at like 3,200. Right now, I think the Dow is looking the best out of all the indexes, as long as it continue to make higher highs and higher lows. So let's keep a watch on that. US 100, NASDAQ. Woo, man, it barely managed to hold support at 10,500, just barely. With saying all that, it still has a long way to go of kind of reversing the downtrend here. If you can break 1,100, I think cleanly this week, we could look for a move to 11,500 or 11,750. Vice versa, I think over 1,200 would shift the Nasdaq maybe into more of a micro uptrend and call for higher prices. If we can't hold 1050 here, then I think we're looking more back down to macro downtrend will continue. Potentially lower lows. Next, let's talk about the VIX. We're talking about volatility here if people aren't familiar with the VIX. Man, last week it was terrible. We had multiple failed attempts trying to break over 2250. Kind of as of right now, we're bear flagging. I think any break below $18 would be a bearish confirmation that will continue to shift more of a macro uptrend on the VIX. I'd say under 18 to 20, which I'm looking at support, we'll retest below, down to 16, 14, or potentially lower. But if the VIX can hold above or hold on to 1820, then I think we need to break above 2250 to see any more to the upside. This is the first time the VIX actually kind of looks incredibly weak in quite a while. This could be a turning point. Watch the VIX. Looking at the Dixie, the DXY, which those unfamiliar is a measurement of the strength of the US dollar. This is where it gets interesting. It's starting to look more and more bearish kind of every week. And with 105 being rejected, that was kind of a nasty candle. I think, though, as long as we're kind of still above support 102, 104, the bulls still have a chance. But otherwise, we lose that. I think that we'll be heading towards $100, 98. I think the bulls still have a chance to make a higher low here. But the downtrend is very much visible and intact. And on that same note, looking at U.S. oil, like crude, it's looking extremely kind of bearish right now. It got denied off of 80, kind of being the new resistance. I think it, sitting around 74, 75. Anything under this, I think, would lead to a retest. You can see down here at about $70 trend. We also last week had the 2-year and 10-year Treasury bonds putting in higher lows. So we'll have to continue to monitor that and see if the micro trend continues. A few stocks I'd keep an eye on this week. Apple, Amazon, Google, Microsoft, PayPal, Netflix, CVS, IBM, AMD. We have earnings coming out this week, being Tilray before the open, looking at KB Homes, Bank of America, BlackRock, Citi, Wells Fargo. Those are all on Friday. BNY Mellon. All right, and last we got Bitcoin, everybody's favorite, people's champ here. As you can see, we've had a great opening here, strong move here, pre-market. On the chart here, you can see as net longs versus net shorts. Reflected here also in the open interest, you can see we've had quite a bit of change. I would be careful FOMOing in here at these levels. No reason for all that. Thanks, everybody. We're off to a great Monday and rest of the week. Let's finish strong. Go Bridge 3 Labs.